Welcome back, investors, to Ticker Time News. I am Adam, and the stock market opened on a lower note today and just couldn't find the upside momentum to shake loose those lows. The major indices all closed near session lows as market participants are likely hesitant ahead of Wednesday's CPI report, which could be the highest reading yet at 8.7% year-over-year inflation, and that would be a devastating reading. The S&P 500 closed down 1.1%. The Dow Jones down 0.52%, the Nasdaq down 2.1%, and the Russell 2000 lost 2.1%. So it was the Nasdaq and small caps that got beat up the most today. Now, growth concerns were at the forefront of trading activity today after casinos in China once again shut down in response to rising coronavirus cases. And then, of course, we had the euro and British pound fall to fresh lows for the year against the dollar, reflecting worries about the European economy. The mega cap stocks were an important downside driver, with the Vanguard Mega Cap Growth ETF, and we'll look at that one first. Ticker symbol is MGK. Let that load there for you. It was down today. It dropped 1.9%. And then you compare that to the 1.1% loss in the S&P 500. There's your big difference. And let me zoom in here on the daily. This is the daily chart. And yes, there are some new lines and features here on the chart. I'll talk about that in just a moment as well. These are going to be great for us going forward. Now, in this downward channel that this is trading in, we kind of have a double top here and a double bottom forming, basically meaning we're in a choppy session, right? The past several weeks have just been chopping sideways, and sometimes that can be good for day trading. Other times the choppiness can just go in radical directions up or down, and it can just shake you completely out of it. So it was down 1.9% again versus the 1.1% for the S&P 500. Then if we look at the Invesco S&P 500 Equal Weight ETF, ticker symbol is RSP. It actually performed better than the Mega Cap Growth and the Nasdaq. I'm sorry, and the S&P 500, because it was only down 0.9%. So it held up really, really well. And if we look here on this chart, again, this is equal weight, all 500 stocks in the basket. They're all equal to one another. It is trading in a sideways range here, not wanting to fill in the gaps that are above the range and below the range until, of course, last week it did. But this goes back, and it started all the way on June the 22nd. And here we are on the 11th of July, just trading sideways, choppy market. Meta platforms, let's pull that up. Meta, META. Meta got downgraded today, and boy, this stock just isn't doing so well. One thing I will give it is it does seem, at least at the moment, which things could totally change, it was down 4.7% today, but it seems to have found a bottom somewhere around the 155 a share range, which is quite interesting. Even with this downgrade today, I mean, it didn't break that level. It's still at 162 after losing $8 per share today. So that's interesting to me that it's holding up pretty well around that 155 a share level. Now, it had one of the biggest losses after its downgrade to underperform from hold at Needham. And then we have Tesla. Let's look at Tesla. TSLA is the ticker symbol for Tesla. How's it going? Glad to see you today. Sorry I missed you guys on Friday. I really do apologize. Some things pop up and they're just out of your control, but we're here today for sure. Tesla also, very interestingly, seems to have found some support down here right around the 620 to 625 level. We can see that down here acting as support. There's been 3 dips to that level. It has held. I don't think it's going to continue to hold. Tesla does have earnings coming up in 9 days. So next week we'll get earnings from Tesla. And quite frankly, I don't think they're going to be that great. doing a little digging over the weekend on Tesla, it seems to be boiling down to China, right? China is going to be the reason Tesla either, misses big or makes it, right? So that's going to be a tough one for Tesla this earnings season because of the factory shutdowns in China, their Shanghai facility, their Shanghai Gigafactory. I think that's going to be key to what Tesla ends up reporting. And then, of course, it's going to be interesting to hear their earnings call to see what they're doing with inflation, what they're doing with their raw materials. How are those price structures and the input cost for Tesla? How are they managing that? Is it still manageable but difficult, or is it getting to another level where it's becoming harder and harder and harder? So it'll be interesting to hear what they have to say. Now, Tesla was down 6.5% today. It's down a 0.25% in the after hours. Of course, we can't talk about Tesla unless we talk about one of the worst performing mega cap stocks after Elon Musk walked away from his acquisition deal of Twitter. Now, these two are linked hand in hand, Tesla and Twitter, all riding on Elon Musk. Let's pull up Twitter. Now, I've got a couple of thoughts here on what Elon may be doing. TWTR is the ticker symbol for Twitter, and you can follow right along at home. There's a link in the description to TradingView. Click on it. It doesn't cost a penny, and you can chart too. Now, of course, Twitter sank 11.3% today. It's up 0.7, 0.8% in the after hours, so there is some dip buying right now on Twitter. And of course, it's all on the news that Elon Musk walked away. However, this story between Elon Musk and Twitter, it is far from over, in my opinion. It looks like there will be either a compromise, which seems to maybe be most likely, I think, at right now at this point in time, because Elon could be walking away as a tactic to get his offer price lowered. Now, we know he offered $54.20 a share for Twitter, and Twitter is now trading at $32.65. So there's a big gap, big difference. This could be part of that plan to try to play 3D chess, maybe. I have no idea. I'm not Elon Musk, so I don't know. But it is an interesting theory, none the least, that it is a negotiating tactic. That's one thing. If not, then this will definitely be going to court, and it will be one of the most interesting acquisition court battles I think we have seen in decades, maybe my lifetime. So it'll give us some content to talk about for sure, and it'll be an interesting case study as we go through whatever lawsuit may pop up, right? Because there is a kind of a walkaway clause, if you would, that if one side terminates the deal, then they have to pay $1 billion to the opposite side. Well, Twitter's claiming Elon Musk needs to come back and either do the deal he promised or pay them $1 billion. Elon Musk says, nope, you've been hiding how many bots are on your site, and that's why we're walking away. So now you're going to owe us $1 billion. Can you see that argument forming? If for some odd reason, maybe not odd to some, if Twitter does have more bots on its site than it does purport that it does, then that's a real big problem for Twitter. Think of all the earnings reports that Twitter has put out during its time as a publicly traded company. This goes back to Jack Dorsey. You know, how complicit was he? If Elon Musk did find evidence that there are more bots on Twitter than they purport to be. So it's going to be interesting. So stay tuned for more news on that. How's it going? Hope you had a great day. Yep, absolutely. Would love to get your technical analysis on Canadian Solar. I have been in this name for about 2 years now, and I feel like it's ready to break. All right, let's look at that right quick. After Oh, I can come back to this. This is a good place to stop right here and pause. I was going to talk about the advancers and decliners and the ratio and just continue rolling on. We'll take a quick little break here, hop into this question about Canadian solar and get that done. So CSIQ is the ticker symbol for Canadian solar. It is on the Nasdaq. All right, let's pull this up. So first off, it's had pretty good momentum, and it has been in a nice channel there. All right, I'm on the daily view on the chart here. I'm going to take it out and get a bigger view, big picture view first. This is one I've been charting for a while. There's often symmetrical triangles, falling wedges on their chart, and they usually have good breakouts. Okay, so now that I've done that, let me get the highlighter out here and show you a couple of things. Number one being that, like I said, there are oftentimes lots of great breakouts on this. So we could, you know, put a line here, just real rough, and one here, right? There's your falling wedge, and then the breakout right there. And then here we have a descending triangle right there, right? And then we have another breakout. So you can see those in there. But there's a larger pattern here outside of these smaller ones that seems to be taking shape. And it's the dotted blue line and the dotted red line. It's forming what looks to be a symmetrical triangle. Now, as price on the top is making lower highs and price action on the bottom is making higher lows, price action is going to continue to get squeezed and compressed. And as it gets compressed and price action kind of slows down, I mean, it had a big 10.3% drop today. So this is a big mover when it moves. So even though we have this symmetrical triangle forming right here, there can be big moves as this price begins to tighten. Now, the one thing that I would point out on this symmetrical triangle right here is the overall trend, right? This has been news driven, I think, mainly over the past few months, right? With tariffs in the news, with China and Canada, with Canada and the United States, that can drive this price to just move. But I do see a symmetrical triangle forming here, which typically the way it works is once you have that symmetrical triangle, you can measure from the top to the bottom of this. And I measured it the wrong way. But that opening, that gap right there is 43, let's call it 44%. So you could potentially see a breakout from the bottom and you go up 44%. And basically it's going to take you back to the top. Let me get that highlighter right quick. Back to the top up here where the triangle formed at this top. So if it does break out, then I would be looking for levels somewhere around $40 to $41 a share on a rally after the breakout of that. So that's what I would be looking for. We've got the symmetrical triangle. If it does break out, and when I mean breakout, it comes out of the channel. It may even then back test it, confirm it now as support, and then start rising from there. And then that's where I'd be looking for the $40 to $41 a share range to take your profit from that breakout. So that's a very big possibility there. But again, headline news can move this And it's not a guarantee that that's going to happen. Sometimes with a symmetrical triangle, you can get a breakdown, right, of this setup right here. It is possible. Now, one other thing to note is since it reached its high in January of 2021, so a year and a half ago, it has been, the overall trend here has been lower, right? You can see during this trend, we've got the higher high up here. Okay, now we have the lower high, a lower high, a lower high, and a lower high. All right. Then we had the low, a lower low, a lower low, a lower low. However, this is where the change may come. The change in direction or momentum direction is from this low hit here back in February of this year. Then we have a higher low and a higher low, which could signal that the overall trend reversed and it's going to break out. So I'd probably give the probability majority to a breakout and the probability of a breakdown in the minority. Okay, so just a couple of signs that I see there on this chart, technical analysis wise. I'm going to clean up the chart and I'm just going to go to the 15-minute chart to get a shorter term perspective on this. Just take a minute to get all these green lines off the chart here. Almost there. Oh, went too far. All right, now I'm going to go to the 15-minute chart here and get a closer look at this. Okay. All right, so I don't see any gaps that may need to be filled. It looks like all of them are. Now, short term here, this is really choppy, and this is probably what's going to continue for the next few days to few weeks. When we get into the bottom of that symmetrical triangle, right, when that triangle is tightening, right, we get higher lows, lower highs, price starts to tighten towards the end of that before the breakout. It is going to be a choppy nightmare in between this. And that's what we're seeing right here with these big moves down, big moves up, big moves down. That's what we would expect to see here on the inside of a symmetrical triangle. So I don't see anything particular sticking out here that screams otherwise. But it will be very, very choppy over the next few weeks, few days, few months, however long it takes to finish out this cycle. But that's what I see there. Right now on the oscillators, we got RSI. It's above a 50. So even though it lost 10% today, it's still looking strong. The MACD down here, we can see that we're getting to, let me open this up just a little bit here. The MACD down here, it looks like it's getting to an area where, let me get the highlighter here again, that you'll probably see some momentum on the top of that, and then you'll probably, see some momentum on the bottom of that for the downside, and it's just going to be small, and it's going to move pretty quick back and forth between positive, negative, positive, and negative. Again, that aligns with the choppiness as price narrows towards the end of that symmetrical triangle. All right. So I hope that answers your question, and good luck with that. Holding it for 2 years, that's a long time, and you're probably sitting on a pretty good gain there. one other thing that I would say, if you're looking to get out of it, you've had it for 2 years, I would wait for price to tighten. And if it's looking like it's going to break down, then drop it. Now, I can't give you financial advice, obviously, but what I would do is if it's getting down towards the support level and it's showing signs that it's breaking down below it, right here is the perfect example of what to watch for, where it did break through this line. Let's get the chart opened up in 2 here. It lags just a little bit. So here on, let's see, this would be May the 13th, right down here, where it broke underneath this support level. Watch for it when it comes back up, right, after breaking out of this channel. If it comes back up to this, what used to be the support level, and continues moving up, then, you know, you're good. You're still within that technical trend there. However, if it gets back to this level and it fails to break through and it starts to head down, well, that could be a signal that, well, this pattern did not hold and it's going to break down. So that would probably be a signal where if I was going to sell, that's probably where I would sell. Now, again, on the flip side, if it's going above this resistance area, maybe it comes back and back tests it and then explodes, I'd ride it up to the high point until the MACD there starts to roll over, maybe, or it's starting to lose some momentum, or there's something very particular that's changed, or just set a price target, you know, $40, $41, get out there. Or the better thing to do would be to set a trailing stop loss. That way, if it goes up 5% and you have your stop loss set at 2%, you know, it could go up 5%, come down 1%, go up 10. And then once it drops down to that 2%, that's when it would execute your trade for you. So that would be a good way to ride the wave up if you're unsure of maybe when it may, the momentum may fickle out, you know, and dry up. So there's some thoughts there, technical analysis wise. I hope that does help with your decision making for it. All right, let's get back to the market today, right? So we talked about Tesla, we talked about Meta Platforms being downgraded, Elon Musk, Twitter walk away, Twitter being down substantially, and the battle that Elon Musk is going to have going forward. So next is buyers. They showed a bit of reluctance today, and I'll just go back here and put the S&P 500 up on the daily time frame. Buyers showed reluctance this session with declining issues leading advancing issues by a 5-2 margin at the New York Stock Exchange and a roughly 3-1 margin at the Nasdaq. Then we have our S&P 500 sectors for the day. Let's go ahead and pull that up. And remember, if you would like this list of all the sectors, just let me know and I'll put them in the live chat there for you. If you look on the right-hand side here, there's an awful lot of red and you see 2 green, right? Most sectors didn't fare so well today. 9 of the 11, they closed in negative territory. Now, the holdouts in the green were real estate. It was up 0.1%, and utilities were up 0.6%. Then you had the counter-cyclical sectors, consumer staples and healthcare, and they were both down 0.2%, and also closed ahead of the S&P 500, even though they were in negative territory. Now, influential groups, heavy weighted, like technology, that dropped 1.3% today. Consumer discretionary, that dropped 2.3% today. And communication services, they also dropped 2.3% today. and they dotted the bottom of today's leaderboard. Now, these sectors contain many multinational countries, right? Or companies. My brain's going somewhere else where I'm talking there. Multinational companies, right? And these foreign earnings are expected to see pressure from the recent strength in the dollar, which has lifted the US dollar index. And let's look at that real quick. Ticker symbol to track the US dollar index is DXY. And you'll see when it loads on the screen how powerful the dollar has been. And you can see this ascending trading channel that it has been in. And just look at it. Look at how fast this thing has been rising, especially just in the month of July. As a matter of fact, let's go ahead. I want to measure that real quick. I want to measure that. So we're going to go to the beginning of July, July 1st here. Okay. It closed up in green. So if we measure this, just the month of July, the US dollar index is up 2.9%. These are levels that have not been seen since 2002. 2002. 20 years ago, 2 decades. That's how strong the dollar is right now, especially compared to other countries in this great planet of ours. Now, the index, it has gained 6.1% since the end of May. Very fast. Very, very fast. For instance, Apple, ticker symbol AAPL, Alphabet, ticker symbol GOOG, and Microsoft, ticker symbol MSFT, they lost between 1.2 and 3% today. The dollar rising is having effect on those big multinational companies. Okay? Now, we can do this just to demonstrate. What I'm going to do is I'm going to put the S&P 500 back up here right quick. SPX. Well, actually, let's use a SPY. We'll use a SPY. And I typed in the wrong ticker. That's why we get a ghost. SPY. I want to put the SPY up here, okay? And we did this last week too. Now, I'm going to add the dollar, the US dollar index, DXY, over top of it, okay? And there's going to be a interesting development. If we go back here to the highs seen of December of 2021, right? From that point, and as a matter of fact, let's highlight this. The S&P 500, right? From this point right here, going back to November and December of 21, the dollar was flat. And this is when the S&P 500 was making this very slowly arching top before heading down. Then we get to January of 2022. The very first big drop in the S&P 500. This big drop right here. What did the dollar do? The dollar went up from this point all the way to right now. When the dollar goes up, the S&P 500 has been going down. So there is this trend here that you can watch and you can follow. So far, when the dollar has been strong, the S&P 500 has been weak, mainly because of the multinational corporations that make up these products. The Nasdaq, the S&P 500, the Qs, the SPYs, right? All right, so I hope I made my point there. The dollar is very important right now to the direction of these markets. And it's also a sign of how earnings will come out in this next earnings season, which kicks off at the end or towards the end of this week with big banks reporting. Now, in the S&P 500 sectors today, dragging down the consumer discretionary sector were two of the biggest S&P 500 laggers. And they were Wayne Resorts. Ticker symbol is WYNN. And I can take the dollar off here like that. It lags just a little, takes a couple of extra seconds. I guess my computer's not powerful enough. But Wayne Resorts, they were down, WYNN, they were down 6.5% today. And then a competitor, right, or someone else who is in the same industry, and we've got a falling wedge here, Las Vegas Sands. Ticker symbol is LVS. LVS. They were down 6.3% today, right? So that's over 13% with these two companies. Now, what do they have in common? Casinos, gambling, right? Well, they traded down in response to the shutdown news from China's casinos. So I know sometimes it gets a little tiring. We want to know about U.S. equities, but what's happening in China, what happens in Europe, it affects directly what's happening with certain U.S. securities, certain stocks that we all like, we all follow, we all trade on. So that's why it's important to talk about what's happening with other economies that are related to what we're currently trading, right? Now, to be fair here, the second biggest sector component, which is Tesla, it did lose that 7% and it fell back below its 50-day moving average. So it's not just the casinos. Now, the largest discretionary component, Amazon, AMZN is the ticker symbol. Amazon fell back below its own 50-day moving average, just like Tesla today. But it did record a smaller loss of only 3.3%. Now, interestingly here, Amazon had a head and shoulders pattern, okay? And we can see that with, we have shoulder, we have head, and then we have shoulder again. But this time, this broke down. This chart pattern didn't hold, and we had a breakdown from it. So it's an example there of how chart patterns don't necessarily 100% do what they're expected to. That's why I wanted to pull out Amazon there. And of course, it is a big component in there. Okay, another area that we need to talk about here is the bond market, okay? The 2-10 spread, well, it stayed inverted today. How can we know? How can we look at that? We can go to US10Y, and then on TradingView, you divide that by the 2-year US02Y, and then you have your chart. And it's tough to read. I do get that. It's really hard to read and see these candles. The candles aren't the important part at this moment. What's important is over here on the right bottom corner, or the bottom right corner. It says 0.973, okay? When this dips below 1, that means you can get a 2-year bond with a higher yield than you can a 10-year bond, which sounds crazy. So the 2-year today, it settled down 6 basis points to 3.06%. But the 10-year, it settled down 11 basis points to 2.99%. So you're an investor. You want to get into bonds. Which would you go in? Would you go for the short-term 2-year at 3%? Or would you go into the long-term 10-year at 2.9%? I know it's a small difference, but it's still a difference. Your longer-term bonds should give you a greater reward because your money's tied up for a much longer time. So this being inverted, again, it just signals a recession is coming. So we have that to watch. Now, the energy complex today, it settled mostly higher. The energy sector, it was down 0.9%. We can load that up here and see. It is holding this support zone here. The energy sector is. Let's look at oil. WTI crude oil. US OIL is one way to get there. WTI crude, my apologies. It's at 102.88 right now per barrel. Now, this was up 1.3% today to $103 a barrel. So it is down slightly in the after hours. But there is a support area that is really strong at $95 a barrel. And remember last week when it dipped down into the 90s? That was the support area. Now it is back up into a bit of a channel that it has been in, even though it's now starting to show weakness. Now, all year, this has been going up. And then we get to June 8th, and we're starting a downtrend here, right? So maybe the trend has reversed. As a matter of fact, I'm going to go ahead and put a permanent line here to capture this downtrend because this is a resistance area here. Now, if it comes back up, can it come back up and break through this resistance line? That will be the test. And if we continue moving out forward in time, when we get to the end of this week, the 15th, that means it's $105 a barrel. That's the resistance line. So that's what we need to watch. By the end of this week, the 15th, can it break above 105, or is that holding as resistance, which means gas is going to start coming back down. Now, natural gas today, well, it did the opposite. It rose 5.9% to $6.32 per British thermal unit. Unleaded gas, it rose 0.2% to $3.46 a gallon. Then we have gold. Gold has been disappointing lately. You can just go GOLD, just type it in. You want to make sure you get US to ounce, TVC to the right. That is the correct one. Gold has broken down, okay? It has broken down big time. Let me see if I can't adjust this chart a little. Looks a little high. So gold has been moving its own self with the downtrend. We can actually plot this line right here, okay? And you'll see that it lines up. Wow. Oh, of course I do that. It lines up right here. There is a big area of resistance. Now, as I go in here, the support levels here, they have just completely fallen and broken down. So as a matter of fact, I can remove those old support and resistance areas because of this breakdown in gold. Now, an interesting thing here with gold is the dollar. And I think this will be the sign. If you want to place a bet on gold, this is how you'll do it. Okay. I'm going to put the US dollar index back above it, DXY. Okay. And you'll see why here. You'll see why. Just like the S&P 500, we can go to this area right here. This is where the break occurred. March of this year. Typically, for the most part, they move sideways together. Okay. There were a few times like, here where the dollar went up, gold went down, and then the complete opposite and flip from that. But right now, we have the dollar going up and we have gold going down. So what do we need to see to place a bet on gold? Well, we need to see the dollar weaken. That's what we need to see. As long as dollar continues to rise, gold's going to continue to fall and underperform. So that's the key right there. That's your key to betting on gold. Now, it was down today 0.5% to 17.33 an ounce. It's basically flat in the after hours. Okay, looking ahead to tomorrow, Tuesday. Let me just take this dollar index off here. Tidy that back up. Okay, tomorrow, what are we going to be looking for? Well, we're looking for the June NFIB small business optimism. Prior month was a 93.1, and that comes out at 6 o'clock a.m. Is that a big deal? No, it's not. It has a very limited weight on the market. It won't affect the market at all. So what's going to affect the market this week? Well, the big news this week will be inflation. The CPI report is due out Wednesday morning. That will move the market. The Consumer Price Index report is expected to show a 1% month over month and an 8.7% year over year rise in prices for June. That's big. Inflation hasn't been that high yet. And you hear a lot of pundits, other YouTubers, talk about commodity prices are coming down, therefore inflation will come down. That is true. That is true. But it takes time for those prices to work its way through the market and get to the end result, showing up in the CPI report or the PPI report, right? The Producer Price Index. So while commodity prices are coming down, that is a good sign for future readings on inflation, just not yet. And this one could be a big one. And then later this week, the big banks in the financial sector, they're going to report their earnings as well. Okay, I want to talk about a couple of key things here on the chart, including this is something new that we're adding, is weekly expected moves. Where is the market expected to move within any given week? I'm going to show you about that. But real quick, if you could do me a favor and click that like button, share this video with your friends. Those two things help out greatly for a small channel like this. Also, if it's your first time watching, click that subscribe button. And if you like this perspective and you want to join other investors in beating this crazy market, then click the first link in the description. I'd love to see you there. All right, here we go. I'm on the S&P 500. There are two purple lines here on the screen. What that is showing is the expected move for this week, okay? I'm going to take the volume off here so we can see the candles a little bit better. Okay. All right. So for the S&P 500, all right, this information comes from the options market. All right. And it's what the options market is betting or placing their bid or placing their ask price for a specific stock, ETF, or indice. The more volume a stock, ETF, or indice has, the greater the probability will hold. And there is a 98% accuracy for this weekly expected move. So 68% of the time, 68% of the time, the market will close somewhere within this range by the end of the week. Okay. So by the 15th, all right, the S&P 500 will be somewhere between 39.90 on the high side, and on the low side, we're looking at 38.10. Okay. So 39.90 and 38.10. 68% of the time, the market will close within that range. Now, we started the week, right, at the open today, right in the middle of that range, literally dead center. Today, we dropped. So now, with these probabilities of what the weekly move is, we have a greater chance that we're going to go either to the upside, because this is how much room we have down here, versus this is how much room we have on the top. Okay. So we have right now at close of today, we have more room to go up than we do to go down to stay within this weekly range. Now, the bad thing is since its accuracy is 68%, that means there is a percentage out there, about a third, that it doesn't stay within this range. And unfortunately, this is a week where that could happen, all because of inflation. Inflation could cause this to be the one time, right, out of 10, where this accuracy, the weekly expected move, does not hold. So if we break below this, all right, we've got some support here right around the 38.10 mark, okay? We also have this support line. It was broken. It has been broken. Maybe it's not that good of a support anymore, but that's somewhere about 37.80. And then if we break that 37.80, we do have a gap that could be filled, and that filling that gap would set us up to be making a new low for the year. That's possible. Absolutely possible. Okay, now if we go over to the SPY, let's check that out for its weekly expected move. So I've got the S&P, the SPY, the Nasdaq, and the Qs. That's what I have marked right now. Okay, so the weekly expected move is 397 as the top side for the SPY. And on the bottom side, we have 379. All right. So 397 on the top and 379 on the bottom. That is the weekly expected move for the SPY. So I keep saying that. 68% of the time, by the end of this week, we will fall and close within this range. If there's a day that it goes out of it, typically it'll close right back in it, okay? All right, let's look at the Nasdaq here. And we've got that same setup for everything here today. It's almost matching up on all these different products. All right, so for the Nasdaq, the weekly expected move on the top side is 12,472. On the bottom, we've got 11,744. Okay, that's the weekly expected move. Now on the Nasdaq, we did break and start making higher lows, but on the top side, the highs have been equal, right? We haven't really made higher highs. So is this a reversal here to get technology moving higher? It could be. I'm not convinced yet that it will be. This is a big week for all of these indices, especially technology, right? If inflation is just going up and up and up, well, we got a problem. We do have, if we break below the expected move, we do have support around 11,525. There is a level of support there. If that's broken, there's a gap that needs to be filled. And then again, we will probably make a lower low for the year, okay? So this could be the week where we are setting up that lower low, or maybe it happens next week. This week's news just causes a big sell-off. It's a possibility, right? All right, Qs. Let's look at QQQ. All right, on the weekly expected move, on the top side is 305. On the bottom side is 286. Now we moved down and got a whole lot closer to that bottom level. If we would have moved up today, there would have been a gap to fill, which would have been an easy move to the upside. But that's just not where things are headed right now. So if we break below that, we do have support at around 278 to 280, okay? And then we break that, there's a gap to be filled, and then we're setting ourselves up to make a lower low for the year, okay? So the setup, it's not looking good this week for being green, I should say. What do you think CPI comes in at? I think it comes in at 8.8. I think it will be high. Absolutely. So let me just pop that up there. I do think that CPI this week, I don't think anything has changed. Yes, commodity prices have come down. Gasoline prices have come down over the past few weeks. Yes, but all of those things take time to show up in the CPI report. They just don't happen, boom, the next week and they show up in the report. It takes time to work through. So I think we're headed higher. 8.7, 8.8, I could totally see that being hit this time around. Then maybe next time it's a little bit lower. Instead of continuing to go higher, maybe next month, maybe it's a little bit lower. But one thing I do fear is that inflation is going to hang around elevated for too long. And it's going to make this recession that we are in last longer. That would be my fear. And that's what I think that could be where we're going. Let's see here. Let's miss this one. I don't feel like anything changed except the last 2 weeks when gas came down. You are absolutely correct. Commodity prices have come down over the past couple weeks, including gasoline. We've seen it. Gas prices have come down over the past few weeks. But The problem is it takes time to show up in CPI. It takes time to show up in the producer price index. So again, I do believe it's going to be elevated. Could this be the peak? It could be. I think the probability is that it's leaning towards yes, this could be the peak unless there's some big major change in the world economy over the next couple of months. So yeah, 8.7, 8.8. I can totally see those numbers for CPI. Absolutely. All right, so we have reached the conclusion of today's live stream. If you have any questions, go ahead and toss them in the comments. We'll go over them. Otherwise, we'll wrap up this video today. I've covered everything that I wanted to, and I think we are good to go. Just let me know in the comments if you guys are good, if you have a question to go over, if you have a stock you want to look at, we can do it. Otherwise, we'll wrap it up and say goodnight. And while we're doing that, I'll go to the 15-minute time frame here for the S&P 500 and just take a little look-see here under the hood on the shorter time frame. Man, nice moves up last week, but today it just broke down. I will point this out for today, right? We had our gap down in the morning, okay? But we were finding support for the S&P 500 right about here. It held up a little bit here, but it did break down a little bit towards the last 15 minutes of the day. But one thing that's interesting about that is it did dip down, but it's pulled itself back up kind of like to close right on that support zone that was in there today. And that came in right about where it closed, literally. Like it closed right on it. 38.54 where we closed, and that's right about where that line is. So if we look at the SPY, what would that be? About 385-ish. So yeah. Okay, let's go to Qualcomm. Go there first. Go back to the daily view here. Now, actually, real quick, before I go here, let me go to the semiconductor index just right quick. And there is a clear downward channel here that it is trading in. It has fallen out of that a couple of times, but pulled itself back up. But it is still trading right on the bottom side of that channel. Hopefully it can hold there, but it's not looking too good. We do have support if it does break down, but it's a pretty big fall before we get to that support area. And then resistance is building just above where it is now, and it is butting heads with that 20-day moving average. All right, now Qualcomm, and actually here I need to do this. And I forgot to add that today. Okay, so if we look at them, man, they're on the top of their range. They hit that like perfectly. It's the blue dotted line, and you can see it. It tagged that thing perfectly on July 8th. And now it's coming back down. One thing of note is a longer term trend line. This one here. It is sitting right on top of it. So I do find that interesting because there is support right now, right around the 130 range. but it is sitting right on this trend line here, like literally at 132, right where it's at. But again, support just a couple dollars below it. That area could hold up. For example, it could come down into that area and then, you know, bounce back up. Unfortunately, I don't think there's strength right now. The overall trend right now is down. You can see that right here. And if I was going to play this one, I would put a put on this. I think it's at the top of its channel. I mean, that's clear to see. It's at the top of its channel. And if it breaks, then it's going to fall right back down to the same zone here, the red dotted line, where it's bounced off of many, many times. Going back to the last time, well, I could really go back to March the 15th. So we're looking at potential, if it does continue to break down, if we go out to that trend line, it's about 10% right now. So yeah, so I'm seeing weakness. Right now, the RSI is just under 50, call it 46. So that's coming down. Momentum has been good for it, but the MACD is rolling over, starting to be a little bit flat there. So I'd really be watching for a momentum shift here on Qualcomm to the downside. That's what I'd be watching for. Oh, come on. All right, I'm just going to take that line off. Okay, next up. Micron here. All right, let's take a look at this. Okay, Micron was in a wedge and it ended up breaking down. Very interesting here. It had like a triple top for this, almost a quadruple top right there. 1, 2, 3, 4, where this thing was just trading sideways, literally, almost perfectly there. And then that was just a continuation pattern from this breakdown here to this breakdown here. And again, when we're trading like this, the patterns are typically, you know, expansion, contraction, right? So first we had expansion, then we had contraction moving sideways here, and then we had expansion again. So now what are we looking for? We're looking for contraction, right? So if we are going to start moving sideways, like we did, you know, up here at the last time we had the contraction there, it would be at the top, and we'd be looking for, you know, a move down to see if it can find support there or not. Now, this is not a support line down there yet because it only tapped it once, right? It only hit down there one time. So let me clean this chart up here a little bit. So what I would be looking for both Qualcomm and Micron are moves lower this week. That's what I would be looking for both of them. Now, all right, let me measure what it was, or from where it is now down to this support area here. And I got to move that tag out of the way so I can see the darn thing. So again, 10%. So it looks like Qualcomm and Micron could be setting up for 10% moves to the downside. Now, the one thing that I would say here positively for Micron is it's sitting, at least the past 3 sessions, it has been sitting right on its 21-day moving average right there. But that 21-day moving average is pointing down. So I think the trend here for both of these companies is down, a move down this week. That's what it looks like we're setting up for both of these. Hopefully that helps you and finding a decision for what it is that you'd like to do with these two this week. But it does look like they're both setting up for a 10% move to the downside. Actually, I'm going to write that down, and I'm going to come back and check it out at the end of the week to see if I was accurate in that or missed it a little bit. All right, just writing that down real quick in my notes here. See if there's a 10% move to the downside over the next few days, or maybe it takes a couple weeks or so. Okay, cool. All right, any other questions? Let me know in the comments. Otherwise, we'll wrap it up here, and we'll get back to it tomorrow. And just remember, investors on Patreon, you guys get all kinds of crazy information to help you along the day, including trade setups, briefs, all kinds of interesting information for you. So make sure to click that first link in the description. Come join us. If the information doesn't help you along your investor journey, then, that's okay. It's all right. I'm good. Thank you. You are very, very welcome. All right. So we'll wrap up the video then here for today. Thank you so very much for joining me. I greatly appreciate you being here with me along this investor journey that we are all on. So I'll see you guys tomorrow after the market closes. I think the live streams are going to be moving to a little later, maybe between the 7 and 8 o'clock Eastern time, at least on the backside of YouTube. It shows that there's typically more people watching around that time versus when I do it earlier in the day, where people are either just getting off work on the West Coast or eating dinner on the East Coast. So we'll see if that works out as a better time frame for everyone. So thank you again for joining me, and I'll see you in the next video.